Welcome back to Live from Paris. It's time for business, and I'm joined by Owen Fairclough. Hello again, Owen. Now, we're starting in Germany and a hugely important decision ahead for Europe's debt crisis.
Claire, we've had lots of important crossroads in this 2 or 3 year Eurozone debt crisis. This decision by the German Supreme Court is going to be one of the more important ones. Judges there will be ruling on the legality of Europe's new bailout fund. There are lots of complicated constitutional issues at stake for the Germans, but of course it goes far beyond the borders of Germany, with huge ramifications for the Eurozone, with Germany, Germany is Europe's biggest creditor, paying a third of the amount into Europe's bailout fund. If the German Supreme Court does reject this bailout fund, it could put Europe's debt crisis recovery in serious jeopardy. Mark Edwards has the details.
8 men in red who can change the course of European history. They're the judges of the German Constitutional Court. Their mission? To rule on the European Stability Mechanism and the Fiscal Compact, and to ensure they're adhering to the fundamental laws of the country.
Plainly speaking, the European Central Bank is imposing massive liability risks on the German taxpayer without this having a democratic legitimacy. And therefore I can understand that Mr. Gauweiler wants Karlsruhe to examine whether this is consistent with the Constitution.
The ESM is the European Stability Mechanism. With a war chest of 500 billion euros, it should eventually replace the EFSF and recapitalise banks directly. It's therefore an indispensable tool for the ongoing rescue of the Eurozone. Any refusal to ratify by the Germans would result in major uncertainty on its future. The German Finance Minister Wolfgang Schäuble said he was certain that the High Court would not block these treaties. The Karlsruhe judges tend to favour greater European integration.
Germany is Europe's guarantor. If Germany now had to say that they do not support the European Stability Mechanism, it would mean an incredible loss of confidence in the euro, and in my view would profoundly threaten the European project.
In 2009, they gave the green light to the Lisbon Treaty, and in September last year, they signed off on the aid granted to Greece and the EFSF.
So we'll get that decision around 10 a.m. Paris time, and of course we'll bring you the latest on that. Just while we're talking the Eurozone crisis, Claire, worth noting that Spain's Prime Minister Mariano Rajoy reportedly considering asking the European Central Bank to activate that new bond buying fund, unlimited funds to buy up the debts of countries like Spain and Italy and bring down their borrowing costs. Rajoy has been talking to a couple of Finnish newspapers, saying he's only considering it at the moment. This is not, in his words, any kind of step towards a full-blown sovereign bailout of Spain. Remember, that country has had already a bank bailout, but Rajoy saying not planning a full sovereign bailout.
OK, let's now get a market update ahead of another important day in the Eurozone. Remarks from China's Prime Minister about the economy have given Asian markets a decent lift. Tokyo and Seoul are both currently up around 1.5%. That was after Wen Jiabao said China would meet growth targets of 7.5% this year. But those words had the opposite effect in Shanghai, with markets there down 0.2%.
OK, well, we're going to look at another crossroads now, this time in neighbouring Netherlands. This country weathered much of the European storm, but still has a golden credit rating. Elections there today could result in a new government that's determined to end spending cuts. Our correspondents in the Netherlands talked to leading financial commentators about the outlook for their country.
Even one of the happiest and most prosperous countries in the world is going through a rough time. The economy is lagging behind, unemployment is on the rise, and property prices are falling. To Pieter Verhaar, the problem is clear. He sold his investment bank at the right time and is now one of the country's leading financial commentators.
I think the real reason for that the economy is lagging behind is that consumers are not spending, they are saving. There's about 360 billion on saving accounts. That's quite a lot of money. And if consumers don't spend, then the economy will not grow.
Marieke Stellinga, an economist and journalist, thinks the new government should not only stimulate spending, but above all reform the labour market.
We have a very high protection of people that are older and are working with the same company for a long time. And we should lower their protection so that the labor market becomes more dynamic and so that it's not a punishment for people to change careers when they are getting older.
Due to the bad economy, the Dutch could even lose their precious AAA rating.
I think if it would happen, it would be a real disaster for the Netherlands, because we have always been one of the most solvent countries in the world, and losing our AAA would be well, I would say it's a loss for us.
At the same time, the damage of a downgrade should be limited.
It could happen because all countries in the Eurozone are under threat of lowering their solvency status. And I don't think that will be a problem, because the Dutch government has never paid such a low interest rate on its debt as it does now.
Usually, Dutch politicians take months to form a coalition. Now the crisis is forcing them to act quickly.
Let's pick up on some more headlines now, starting in Russia, where the Kremlin has heightened tensions with the European Union over a long-standing gas dispute. President Vladimir Putin has signed a decree that bans companies considered important to national interests from cooperating with foreign authorities without permission. The move will complicate an EU inquiry into allegations that energy supplier Gazprom has exploited its dominance to disrupt European gas supplies.
Prada shares have continued a big sell-off across the luxury goods sector. The Hong Kong-listed firm's stock was down nearly 3% at the start of trading. That followed Burberry's 20% slide after issuing a profit warning. Luxury goods have outperformed during the financial crisis, but Burberry now fears the impact of a slowdown in expanding markets like China.
And an informant who blew the whistle against Swiss bank UBS has been awarded the largest reward of its kind in the United States. Bradley Birkenfeld has been paid $104 million by the Internal Revenue Service. He exposed UBS over a widespread fraud to help wealthy Americans dodge taxes by hiding cash in secret accounts. Birkenfeld was jailed for nearly 3 years for withholding other information and is now under home confinement.
Now, here's something we don't say very often on the show. Facebook's stock ending the day up with a decent gain, over 3% at the close of play on Wall Street. It wasn't the first time that its stock has done well, but remember, Facebook shares have been down some 50% since what many have called a disastrous stock market flotation back in May. The reason for the stock doing so well yesterday, some fairly candid admissions from founder Mark Zuckerberg about where Facebook went wrong.
Everything I do breaks, but we fix it quickly.
Fast moves like that helped Mark Zuckerberg build the world's largest social network with more than 950 million users, but Wall Street didn't buy into it. Since the company's disastrous initial public offering on the Nasdaq in May, Facebook has lost $50 billion in market value, and shares have been cut nearly in half. For the first time, Zuckerberg spoke about the Facebook flop.
The performance of the stock has obviously been disappointing. And we're going to do the things that we think are going to build value over the long term.
He made Facebook's strategy going forward abundantly clear.
Mobile.
He mentioned the word 37 times in 25 minutes, but Zuckerberg dismissed speculation about a potential Facebook phone. Instead, the company will tailor its services and optimize ad revenue for mobile devices. The big problem? How to get advertisements on Facebook's mobile platform.
Over the next 3 to 5 years, I think the biggest question that is on everyone's minds is really going to be how well we do with mobile. Per amount of time that people spend on mobile, we think that we're going to make a lot more money than we do on desktop too.
Mobile may be the new direction, but it might not be the solution. Investors have questioned Facebook's platform before and will do so again. They're worried about the company's ability to generate new revenue apart from advertising, and prioritizing mobile might not allay these fears for long.
And that's it for business. Thank you very much, Owen, and thank you for watching. Stuart Norval will have the headlines in just a few minutes' time. Don't go away.